Hey everybody, it's Seth Paul Mo for Everything Money. We welcome you into our wonderful channel. Oh my gosh, it's growing by leaps and bounds. So many subscribers. Last September we had less than 1,000. Now we have like 25 billion. So we welcome you in. I'm your debonair host as always, and I'm here with Paul. Paul, how are you, Paul?
I'm wonderful. We were just talking about that show, A Teacher on Hulu. And you know what's funny? It starts the show with like,
oh God,
with this like warning, like, hey, if you're concerned about teachers,
go on,
preying on students, here's a website.
Oh Lord.
It's like a hyphen teachers hyphen something, and I was just like, oh well, let's get to the nudity.
That's not why you stopped by today. You stopped by. We're talking about DraftKings today. We want to learn the health of this company. A lot of exciting news. It's expanding. Paul, they own the OSB. What is the OSB? OBS? What is it? This online sports betting. OSB. They're into iGaming. They're the big dogs. They spend a gajillion dollars on marketing, and they're getting into new markets. They're entering Canada. Yada yada yada. What I would say, guys, is we haven't done a ton of due diligence on this company. We are not the news. I just steal some articles from some smarter people than myself. So if you're here to think about the growth of where this is going, that's not exactly what we look at. Paul is more interested.
Well, no, we do look at that.
Of course.
One of the most common things I get from people who criticize me in the comments about hype stocks is you didn't do your due diligence. First off, just because I disagree with you doesn't mean I didn't do my due diligence.
That's true.
But secondly, I did not go research the company immensely. That is not what a smart investor will do. A smart investor has a funnel, and they're going to start with a screener and say, what companies hit this funnel? What companies have I put in for these attributes will hit? From there, then you do your due diligence on seeing 8 pillars is about starting at a high level view and seeing which ones even tell a good story that you want to go learn further about. It's just like dating, right? When you first meet somebody, when you first, let's say you do
the swiping. You're a fan. You're a huge fan of this.
You don't swipe right on every single person, then talk to them and see. You sit there and go, okay, listen, unfortunately, this is gonna be based purely on their looks. I'm gonna swipe right on the ones that I like, and swipe left on the ones I don't like.
I'm sure your thumb has been hurting lately with the
Actually,
swiping.
I swipe left a lot more than I thought. And I don't do it anymore because I sort of have a girlfriend.
Oh, so now she's your girlfriend.
No, she's not my girlfriend.
Did you hear that, Mo?
Wifed up.
Look at that. Yeah. Just like that. A week ago, she's not my girlfriend.
I just said it right now. I just said it right now. Anyhow.
Congratulations. Keep going.
She's a lovely girl.
She's coming tomorrow.
She is coming
Wonderful.
tomorrow.
Let's get to it.
I'm not done with my spiel yet.
I know. I'm just cutting you off. Mo, later in this episode, folks, Mo talked about the trading aspect of DraftKings and why you're intrigued by this company.
It's interesting because they're hitting all-time highs. Oh, and if we just look back on the chart, they were doing nothing. And then all of a sudden in March, and when people were sitting home doing nothing, this thing started to explode. So we're getting to all-time highs. I usually talk about going very long-term on stocks. With this one, it's going to be more of a day-to-day kind of thing if we get some kind of indication. So that's what we'll do later on.
Before we proceed with our 8-pillar analysis, make sure you tickle that thumbs up. A lot of other YouTubers, Paul, say these videos take an incredible amount of time to make. We're the exact opposite. I just told Paul about this company, and we're going to do this about 7 minutes ago. So for all the effort we've put in so far.
And by the way, that 7 minutes was already us screwing up and not having the mics on. We had to restart. So that's involved in the 7 minutes. What was that? No, I don't mean like that. I mean it like that 7 minutes should have been 3 minutes. It's just that we started talking and then
So with that said, to reward us for an incredible amount of effort we put in on our part, is tickle that thumbs up as always. We know you love it. Paul, let's look at DraftKings. What an intriguing company that I won't be using at all anytime soon. But what is the market cap for this bomb diggity?
DraftKings market cap is $28 billion.
28. Wow. Okay.
Why do we have black marker?
We changed it on you. Go ahead.
Oh, that's sad. $28 billion market cap. Last year, they did $659 million in revenue. PE? Well, it's hard to have a PE when you have no profit.
That's a tough one.
So there's an X on PE. Profit margin, obviously, is an X because of the fact that you don't have profit.
No profit.
So
okay.
We're off the dribble, up to 2. Now, keep in mind, by the way, folks, to have revenue of $659 million and a market cap of 28, that is a price to sales ratio of 36.
Now you're switching. You like this price to sales or no?
I like to show it when it comes to majorly overpriced companies. A company like Microsoft, which has a lot of margin, so you can justify a very, very high price to sales. I think Microsoft is like 7. Apple's like 7 or 10. That's how expensive this looks. I don't think their gross margin is actually lower than Microsoft's and Apple. I think Microsoft and Apple both have over 50% gross margin. So I'm looking at this saying, off the bat, guys, I'm already feeling like talking about that funnel, this would be out of my funnel. But let's go deeper to see, because it's a very exciting company. They're making a lot of headway. But so far we have 2 X's.
Revenue growth is pillar number 3. What do you have for revenue growth over the past few years?
Okay, so we only have 4 years of data, and it is good growth. 190 million to 593. So there's a check mark there.
Okay.
Profit growth.
Profit, pillar number 4.
This is a huge X. They lost 75 million, now they lost 844 million. Huge X. Doesn't make me feel bad about Dynasty owner losing money now.
So, considering I'm an idiot, is like, explain to me real quick how revenue is so up and profit is so down. What's
They're probably
going
spending
on?
more and more money on advertising.
Yes.
So sales, look at this. There's SG&A expense, sales and and then their marketing expense, look at how much it's up. They went from 157 million to 495 there. So that alone was a big jump. And then their general administrative expense, 77 million to 616. I mean, their total SG&A expense is $900 million more.
They advertise like no one's business.
Yeah, and they offer you like, hey, give us $100 today and we'll give you 5,000 or something like that. I mean, it's something crazy.
I'm pretty sure they advertise with like a lot of major sports, like NASCAR,
Oh yeah, no,
MLB.
they have. You're absolutely right.
Yeah.
No, they have exclusive contracts with like every team.
Exactly.
They're
Yeah.
going bonkers
Yeah.
on this.
I would love to see their advertising bill.
Well, we just saw it right here. And that's literally what I just did, Mo.
Oh, that's only okay. Good point.
I'd love to
Good
see
point.
their advertising.
Good point.
I knew you were gonna hit him with that. You were such a sneaky little fox there, just like ready
Good
to
point.
just strike. Okay. Shares outstanding is.
Oh my God, shares are down.
Come on.
312 to 305. There's a check mark there. I literally thought that was going to double. I thought the shares outstanding was going to double.
Shares are down. Okay, that's a check for there. Current assets over current liabilities. Why is this important, Paul? Tell our new viewers.
So total current assets is basically the cash you have on hand, and the total current liabilities are the bills you have. Not every company is going to have more cash, but to me, it's almost like I should have more cash on hand than the bills that are due very soon. If I don't, I'm already. Now, some businesses have lines of credit and they buy from suppliers who give them credit, et cetera. In the food business, it tends to be a lot of negative number there. But I like seeing the total current assets being at least greater than the total current liabilities. And right now, the current assets are 2.2 billion. And not only the current liabilities, only 554, but the entire company is 742. They have about $1.4 billion in extra cash. So you can take it off the market cap because basically you can take all the cash on hand and pay off all the debts of the entire company and still have $1.4 billion left over. So if you buy the company for $28 billion, you're essentially buying it for $26.6 billion. So this is the best check mark you can get. I love it. And if you were to ask me before I said it, what would I thought? I thought it was going to be. I was actually going to interrupt and say, I bet you they have way more cash on hand than total liabilities.
That's why you're you and I'm me.
Yep.
Okay. Pillar number 7 is free cash flow growth. This is cash from operations minus capital expenditures, my dear Paul.
Negative 95 to negative 384. That's an X.
That's no free cash at all.
We have no free cash flow. So the last pillar of price of free cash flow is negative. So it's you can't have a negative.
Negative. You can't triple stamp a double stamp.
Correct. You can't have a negative price of free cash flow. It just doesn't exist. So, guys, overall, forget about even these numbers looking bad. The valuation is what makes me go, this is no. Because for them to be worth $28 billion, okay, I look at it saying, okay, what profit would you want to make to be worth $28 billion? If your answer is 15 times, so basically let's call it $2 billion in profit. $2 billion in profit. Let's assign a bottom line margin of 20%. That means they're going to have $10 billion in revenue, right? Because in order to get 20%, in order to get $2 billion in profit, net profit for 20%, you have to make $10 billion, right?
This is off your basis of the current market cap.
Right.
This is what you'd like to see.
Right now, the company does $650 million in revenue. So it has to grow by 14, 15 times. Now, does that mean it's not going to happen? No. But why are you going to pay $28 billion for a company that still has to do all of this?
Well, because it has a good chance, right, Paul? DraftKings is live in 12 states.
Well, then where do you make your money?
So
how do you make your money if you're paying for the future value today?
Oh, hello.
As an example, you buy your house today and it's $150,000. 40 years from now, it's going to be worth $400,000. Does that mean you pay $400,000 today for it? Because that's the argument you're making here. You're making the argument, well, it's going to be worth that someday. I should just pay for it today. Well, where's your profit then? This is a very common thing, not just amongst regular people, amongst financial advisors. It's absolutely asinine.
Yeah, and this is what's happening with a lot of things in this market.
Correct, and everything's about the future. Great.
It's all about future. I read something more on my morning show it was on Bumble, and it was saying that there's a chance that this can happen, and that's why you should be paying this amount for the stock. And it's just like, but it hasn't happened, and what's the proof that that's going to happen?
By the way, even if it does happen, if you're paying for that to happen already, what happens when it does happen?
What happens when
you're just paying the price it would be worth.
Mm-hmm.
That's no different than buying a house today for the price it's going to be worth in 40 years.
Mm-hmm.
That is the best analogy I can come up with. The next best one is paying a minor league baseball player $30 million a year because they could do that. But they haven't done it yet. And when they do it, you've already paid them $30 million a year. Where's your profit?
Did Mo just say he was getting stock advice off of Bumble? What?
No, the Bumble stock.
No.
I thought the same thing. I'm like, how are you getting news off of Bumble?
The girls give me great news on Bumble, so that's what I go with. That's my credibility.
Okay.
The great news Mo gets off Bumble is, yes, I'll meet you for a drink.
Okay, so I mean, it looks like it does have a lot of states to get into, Paul. I mean,
I
it
like
does
this
have
home analogy. I said this once before. I really like this home analogy.
I really like your baseball
Everybody,
analogy.
well, but not many people get the home analogy. Everybody gets the home
That's true.
analogy.
That's true.
Everybody gets because 80%, 70% of this country owns a home.
Right.
So, and everybody wants to own a home. So I'd sit there and say, when you're going to buy a home, do you sit there and worry about what it's going to be worth in 40 years? No, you hope it's going to be worth more, but that's for you to earn. It hasn't earned it yet. Let you get the profit. That's the only thing you're doing right here. If a genie came to me today, if the good Lord above came down and said, Paul, DraftKings will have $10 billion in revenue in 5 years. Guess what? I still wouldn't pay $28 billion for it.
Is that true?
Well, think.
Of
Seth,
course, sorry.
Why would
I'm just
I do
trying
that?
to follow along. You're so fast. I'm just trying to follow.
Of course I wouldn't do that because I'll be like, well, where's my upside then? I just paid what they're going to be worth. Where's my upside? It's like God coming down and saying, Seth, you bought a house for $540,000. It'll be worth $2 million in 40 years. Are you going to go pay $2 million for it?
No.
Even if you could afford to, would you? No, because that's for you to make. If you're going to go pay its future worth, you have no upside potential. And if you do this 100 times, folks, it's going to end up bad. That's my whole point. By the way, there'll be a video soon showing the dot-com bust and how companies did during that time. So always think about it as, why am I paying? Now, that doesn't mean that. Now, here's the thing, though. Mm-hmm. If God came down and said, Paul, they're going to do $100 billion in revenue in the next 10 years. They're going to have $20 billion in profit. Would I pay 28 today? Dang right I would. Yep. Absolutely. This is where I'm seeing the upside of growth and saying, absolutely, I would pay this. Because then this company is worth $280 billion in the future, and I'm going to get a 10-to-1 just by being patient. Now, obviously, if I also found out their shares outstanding are going to quadruple, I'd be like, well, wait a second. But of course I would pay that. And that's the difference with growth, buying purely off of growth versus factoring growth as part of your equation. I absolutely would pay $28 billion for this company today if God came down and said, Paul, shares are going to stay the same. Everything's going to stay. They're going to still lose money for a few years, but it'll be worth it'll be making $20 billion in profit in 5 or 10 years. Sign me up. Wouldn't even blink an eye.
God has to come down. He can't just tell you while you're sleeping or in bed or something. He has to arrive.
So I want some proof.
All right, Mo. Let's head over to Mo with momentum. Dr. Bidden asks, what is going on with the trading
Dr. Bidden
aspect? Go on.
So we are we're at all-time highs. That's where we're at. The reason I'm not doing anything right now with it is because we are at those all-time highs, and I want to wait to see if this thing is going to propel even further. Now, like Seth said, they're starting to get into other states in the country. They're starting to make the move. That kind of stuff can create hype and really send the stock price higher and maybe turn it into a true power stock. So for this growth has actually been relatively slow from a chart perspective. I would want to see this thing move up more in that direction more quickly. So let me go to a daily chart to show you how I would actually trade this thing. And that would be as a swing trade. So I don't do a lot of swing trades, as you guys know, but a swing trade is 1 to 5 days. And right now, since we're at that current high, we're coming through the sweet spot. Okay, we have pretty decent volume over the past 10 or so days. What I would want to see is a good green engulfing candlestick like yesterday's right here.
Giggity.
To increase tomorrow or Friday and just get up there and get moving to a new all-time high. That's when I'm going to say, okay, buy this stock. At that point, you're going to get some kind of resistance in there, that's when you sell it. So you can go in there, make a couple bucks on this here and there, but from a long-term perspective, not my thing right now, just because I want to see more of what Seth is talking about. I want to see more hype and just get this thing moving in a little bit sharper of an upward direction.
Paul, your final take on DraftKings, in your opinion, before we get slayed in the comments, in your opinion.
I would avoid it. That's my deal. I mean, unless you have some crystal ball, it's going to tell you it's going to go to some unastronomical level. If you're sitting there saying, I'm going to pay $28 billion today, because I think it'll be worth $28 billion in the future, give me a call. I will give you a percentage of my future profits, because someday I'm going to be worth $10 billion. So give me a lot of money today and you'll get a piece of that $10 billion someday.
Well, they have access to your emails behind you if they want to get a hold of you. So,
Oh, yes, they do.
Okay. If this resonates with you, the idea of looking at the math behind these companies, and maybe not so much if falling into the trap of just listening to hype YouTubers, feel free to join our Patreon. The link is in the description below. Paul, you're very proud of this Patreon. We started it in October, November?
November.
Incredible.
Well, I'm very proud of it because Seth was very stubborn and kept asking me to do it. And then when I finally figured out the way in which it worked for me,
Yep.
it's been a huge success. And I'm glad that Seth bothered me about it, because I don't think we'd be doing it today had it not been for that.
So we've created an incredible like-minded community. Paul is not so much in love with the word community, but really the messages going in and out of our Patreon on a daily basis is incredible. If you feel alone out there, Paul, we're going to do a video about the markets, because I've talked to people who literally, when you say put money into the market, they don't even know what you're talking about. If this is over your head and you finally want that financial advisor, we can give it to you at a very small fee for our Patreon fee, and you get the Everything Money website, the 8-pillar analysis, you get live streams. It's absolutely incredible. And if you join our live streams on Tuesdays and Thursdays on YouTube at 1 p.m. Eastern, you can see all the patrons and see their amazing comments. So it's a wonderful community. The pricing is always going to be going up. It's a very sought after community that fills up on a just per week. We're making new groups. It's filling up so fast.
I mean, we're getting 20 or 30 signups a day,
It's
which is a
bonkers.
lot for only having 22,000 subscribers. So we're very proud of it. It's going to be the main focus of this show, is building software that's going to make everything great for you. There's only 40 some spots left in the $16 level. So sign up now. By the time you view this, it might not even be $16 level anymore.
I was going to say. And if you're drawn to trading, day trading, and momentum trading, you can join Trader Mo. Trader Mo does morning shows, and his middle tier level, those guys are slaying it, making money. Am I right, Mo?
Yeah, I had somebody today that said that they joined earlier, mid-February, and they've already covered their entire year of Patreon with me in that level.
We thank you for your support as always. Make sure you tickle that thumbs up on the way out. You know, Paul's little baby butt cheeks need a good tickling every once in a while, and so make sure you tickle that thumbs up. We love you. Thanks for joining us, DraftKings. Appreciate it.